Exercising incentive stock options and afraid of the alternative minimum tax? You should be. The alternative minimum tax is this separate tax system that most of us never have to deal with that could lead to a surprise tax bill or, worse yet, paying more tax than you actually owe. Here's how to understand the alternative minimum tax when exercising your incentive stock options. The first thing you need to know about the alternative minimum tax is that it's a parallel tax system. So when we talk about the regular income tax, the one that we're all familiar with and that you pay every year, we typically talk about a calculation that starts with income, then subtracts deductions and credits to eventually get to total tax owed. And the alternative minimum tax works like that, works parallel to that tax system with a few key differences. And the most important key difference for our clients is how the alternative minimum tax handles the exercise of incentive stock options. So with the regular income tax, incentive stock options are not taxable at exercise. Nothing related to the exercise of your incentive stock options gets reported, gets included in the regular income tax calculation. But that's not true for the alternative minimum tax. So with the alternative minimum tax, the exercise of incentive stock options is what's referred to as a deferral item. It counts as income. And specifically, it's the bargain element that's taxable. So it's your fair market value at exercise minus your strike or exercise price, then multiplied by the number of incentive stock options that you are exercising. And that's what's going to count as income for the alternative minimum tax. And so when we're getting ready to exercise incentive stock options, there's typically a number of ISOs that you can exercise without triggering the alternative minimum tax, and then in an amount past which any additional option exercised is going to trigger the alternative minimum tax. Now, the next thing that we want to understand about AMT is we want to understand the timeline. The timeline is really important because it relates to kind of three different ways that you can really mess that up, but that I'm here to help you avoid. The first point on our timeline for AMT is year one, and that's when you exercise. And so it's the exercise of your incentive stock options that triggers your alternative minimum tax. But unlike your paycheck, your salary, the direct deposit that shows up in your account every other week, where as soon as you receive it, taxes have already been withheld, just because you exercise your incentive stock options and you trigger the AMT doesn't mean anything is actually happening in terms of you paying that tax. It's only in year two, when you file your tax return for the prior year, that you reach that point where now it's time to pay up and you have to pay that alternative minimum tax that you triggered in year one. The next point on our AMT timeline is year three and beyond. So now we're talking about those future tax returns in future years. And the reason this is important is that whenever you pay the alternative minimum tax on incentive stock options, you generate a minimum tax credit. So every dollar that you pay in AMT becomes a credit that you can use in future years to reduce your regular income tax liability. And this credit never expires. Any amount that's not used up in a given year gets carried forward to the next year. And typically every year in year three and beyond, there will be an amount of minimum tax credit that you can use to reduce your regular income tax liability. But another thing that's really important to understand is that you need to adjust the cost basis on the shares from your incentive stock options to recognize any AMT paid. And the reason this is important is because in the years where you end up selling those shares, you can accelerate that minimum tax credit and be able to use more of it in a given year. Now let's talk about how you can mess this up. First is year one, you could be totally unaware of the alternative minimum tax, and you could be thinking about the exercise of your incentive stock options as simply, how much is this going to cost me right now? Not realizing that there's a big tax bill coming in year two. The second mistake that you could make is maybe you knew about the alternative minimum tax, but you thought, I'll worry about that later. And you exercise with no plan for how you would actually pay that. And so when year two rolls around and you file that tax return, you're hit with this big bill, but no way to pay it. And then the third and final mistake in year three and beyond is not making the proper adjustments to the cost basis of your shares. And by doing so, slowing your ability to recover the minimum tax credit or paying more than you actually owe. To me, this is the worst mistake because it's the one that could lead to you paying more than you actually owe. And every year we're working with new clients who have failed to properly account for their minimum tax credit. And as a result, we're uncovering opportunities to amend tax returns and get refunds back, tens of thousands of dollars of taxes that they paid in prior years that they did not actually owe. But by watching this video, you're taking the first step to avoid all three of these mistakes. And the next step that you want to take to make sure that you don't mess up when it comes to your alternative minimum tax is go to our website, kbfinancialadvisors.com. And there we've got an AMT calculator that can be the first step to you figuring out how much AMT might I owe when I exercise my incentive stock options this year. Take a look at this calculator now, and then go ahead and book a call, and let's talk about AMT and how it applies to your situation.